Okay, it's pretty simple what's going on right now in the market. We're going to show a couple ETFs that track commodities, the dollar, the euro, and the VIX, and we're going to show these relationships with the S&P 500 and what's going on. So first of all, we're going to focus on USO for oil, UUP for the dollar, FXE for the euro, SPY for the S&P 500, and $ VIX, of course, for the VIX. Now, a couple weeks ago, the VIX was very low. It was in this, 14, this 15 and a half, 16 range. And we talked about in a couple of our commentaries how when the VIX is that low, you don't have the familiar inverse correlation play out, meaning that when the VIX is rising, the S&P tends to be falling. When the VIX is declining, the S&P tends to be, and vice versa. When the S&P is falling, the VIX tends to be rising. If you look in this period right here, we're going to zoom in, you can see that there wasn't really any movement in either. The up and down action in the VIX wasn't really affecting the action in the S&P 500 as shown by SPY. But now look what started to happen here if we zoom in at the last 3 days. Okay, or last 4 days rather. S&P 500 was around 1420 at the time. The VIX was around 15. Now the VIX has crept all the way up to 1825. The S&P 500 has fallen down to 1383. About a 3% drop. The point becomes even more clear when you look at the intraday action. Look at this correlation now, the last 2 days. A clear inverse correlation between the S&P 500 and the VIX, especially today. Okay? You can see that the VIX is on top. So it opened very high and declined throughout the day, and now it's making a push. Well, look at SPY. SPY opened very low, and then it's been rising ever since, and now it's making a fall. So our first point is that the inverse correlation between the S&P 500 and the VIX is alive and well. It is very much back in play. So what that means is you want to start watching those levels on the VIX very closely now. That 20 point level on the VIX, if we get above that, if we get above 20 on the VIX, I would expect a lot of trouble for the S&P 500 in the immediate term. However, if we remain below 20, then we're probably halfway to 3/4 of the way through this pullback. All right? So that's the first thing we want to show you. Now, let's replace the VIX with the action in the US dollar. UUP shows the dollar. Pretty much the same exact thing for the last 2 days, right? All right, well, we got a gap down today, so it's going to be hard to see. But look at this action today, okay? UUP's on bottom, SPY's on top, so the S&P 500. Again, clear inverse correlation going on right here. So, by that logic, the VIX and UUP are correlated right now. Okay? You can see that they overlap each other, showing a strong correlation going on right now. So, with those two things known, we can come up with a thesis. That thesis says, right now at current levels, continued strength in the dollar and the VIX, because they're moving together, will not bode well for the S&P 500. Let's talk about what will bode well for the S&P 500. Look at the action in USO, okay? It's been in a downtrend. Oil's been in a downtrend, right? Now, if we put it on top with SPY, you can see that For a while, they were correlated too. However, weakness in USO back in February has started to catch up to the market now. And if you zoom in and look at the intraday action, you can see that SPY has kind of been chasing USO higher, right? And so by that logic, we can say the market needs oil, as represented by USO, to stabilize here. And if it does that, if it can trend back up and reverse out of this downtrend, that should bode well for the S&P 500. So by that logic, again, we should see USO and the VIX moving somewhat inversely, which we do, okay? Now, our final one is the action in the euro. Again, it's been in a downtrend just off of the last 3 days, and really it's pretty much been flat on the year, right? It's made some ups and downs, but year to date, it's pretty much unchanged. January 3rd, 2012, it was trading around 130 to 130.20. As of Thursday, it was between 129.80, 130.15. Today, 129.90, 130.70 on the high, settled around 130.50 currently. So again, especially recently, this weakness in the euro has really started to catch up to the S&P 500. Or catch up is the wrong term, because that implies that the S&P 500 is going down because of the euro, and we would never pretend to be smart enough to know why the S&P 500 is moving lower. All we want to concern ourselves with is what's going on at the same time. Meaning, as the S&P 500 is going down, what else is going down? Other side of that, what else is going up as the S&P 500 is going down? Because if we can single out those that which are moving lower with the market or opposite of the market, we can kind of pick leaders here, and we can watch these leaders, and we can look for potential changes in trends and stuff like oil, the VIX, the dollar, the euro, and we can say, okay, something's happening here. We're seeing a change in trend in something like the euro, so maybe that means we'll soon see a change in trend in the S&P 500. Again, we're speaking theoretically. We haven't seen these changes yet. But again, you can see the action in the S&P 500 and the euro, they're moving, they're correlated right now. You know, they overlap each other a lot. So strength in the euro is coinciding with strength in the S&P 500. Strength in oil is coinciding with strength in the S&P 500. Strength in the VIX is coinciding with weakness in the S&P 500, and strength in the dollar is coinciding with weakness in the S&P 500. So there's our 4 indicators that we're watching, where now if we see USO in the coming days, you know, it opened lower today, but it's well off the lows today. So if this can be the bottom for USO, same with FXE, it opened lower, but now it's gone green. The flip side of that is UUP opened higher and now it's fallen down. The VIX opened at its high and has come down. So if we maybe have some short-term tops and bottoms here in these indicators, then that should bode well for the S&P 500. Otherwise, if we don't have the tops and bottoms that we just shown, and these are merely pauses of the new trends that have started, meaning this uptrend in the VIX, this uptrend in the dollar over the last couple days, this downtrend in the euro, and this downtrend in oil, then that would tell us, at least we would presume, that this downtrend in the S&P 500 will continue. So there you have it. That's what we're watching, and that's what we recommend other people should be watching.